Welcome back. Let's talk about the markets, the way forward. Rahul Veera, fund manager of equity investments, Nippon India AIF, is now joining us on the show. Rahul, thank you very much for joining in. From the last time we spoke, markets have inched up. The RBI has front-loaded its liquid rate cuts and liquidity infusion, and plus US and China have agreed upon a framework. So all those trade talks and tensions, tariff, perhaps a little bit, has eased compared to before. How are you looking at the markets from here on? Because last time you were busy deploying your cash.
Yeah, you're absolutely correct. Just to add to all the catalysts that you mentioned, right? Also, the earnings cut that we saw in FY25, almost like 5 to 7% across the Nifty names, and across the NSE 500 names, it was closer to 15% to 20% in the small cap side. So that is largely behind. So in the Q4, if you see the earnings cut that has happened, that has hardly been 1 to 2%. So going forward, right, given the low base of Q1 plus FY26, the earnings expectation from the market is just 10 to 12%. We believe earnings cut is also largely behind. So this year will be largely a year of consolidation. And in terms of earnings visibility, macro stability, it's very clear that things will be positive from here on.
All right. Hi, Rahul. Good afternoon. Good to see you in. The last time around, you had cut your cash in the, that you were holding, I think, from early teens. You had brought it down to single digits. Now, I wanted to ask you about a couple of sectors, particularly the ones you are not very bullish on. Real estate, I don't think that's a sector that you like too much, right? Now, with this rate cuts, there is hopes that, EMIs become cheaper. It gets people more interested in housing. Have you changed that view, or would you want to stay away from real estate?
As of now, we prefer to be on the sidelines. We do not see much of the traction that is happening in terms of the volume pickup. So if you see the top 7 metro cities, the inventory levels on the higher end has started increasing. So some of the indications are there that probably the kind of numbers that the market is spending in terms of the pre-sales, I believe that next 1 or 2 years, it might not be as much as the market is expecting. There will be some disappointments there. So on the lower end of the curve, yes, like your 1 crore, 2 crore kind of a flats, some volume traction might come in because of the rate cuts. But broadly, the pre-sales will not match the FY23, FY24 numbers.
So you continue to remain, real estate is in a void for you all. And as you said in the past, I think cement is something that you liked. So we'll keep an eye out on that. But what about, the power sector? That is a theme you've been extremely bullish on. Let's narrow it down a little bit. If you want, you could share us some names as well in terms of what you'll hold in the fund. But how do you play this theme? Because, there'll be a lot of ways to play it. Please go ahead.
Sure. See, overall, across the power demand supply mismatch, the story is very well known. But what kind of plays you want to do? You don't want to direct power generators, or you want the transmission and distribution. So we prefer the transmission and distribution names. Multiple MNCs are out there, largely 3. And again, in terms of their specialization, right, they are going to be there over the kind of order book. More than 1 lakh crore is still expected to come through. We're largely bullish on that space, HVDC transmission lines. Now, what is happening in the sector is the kind of solar power and the grid connectivity, right? We recently saw how the disconnection happened in Spain with too much of emphasis on renewables. So all these kind of one-time impacts have to be reduced only with HVDC lines. So our expectation is the larger order books for some of these HVDC companies is going to become stronger. They're expensive, but they'll continue to remain expensive in the medium term.
What's the cash that you're holding? And incrementally, in the last 1 month, where have you deployed the money that you've got?
So incrementally, we have started deploying in some of the PVC pipe names. We believe the sector has broadly bottomed out. So if you see the past 10 years average for PVC resins, right, has been closer to 72. Broadly, now that has gone down because of the Chinese dumping that came down to 65, 66. In the past 1 month, there have been 3 price hikes that have happened. So once it was 1.5 rupees, the second time it was closer to 1 rupee. Again, last year, we saw the kind of volumes the management were expecting across the names didn't come through, largely because of the government capex. Now, this year, monsoon is going to be better, plus your government capex is going to be better. So volumes plus price, both these impacts will start throwing the numbers for the PVC segment now.
Do you want to name some names? Is it Astral, Phenolex? I mean, with the appropriate disclosure, or is it the entire sector which is going to do well from here on?
Our views across the sector, we like all the names.
You like all the names, okay. Anything else that you've put to work in terms of, further deployment, in terms of further buys?
So our view is even IT as a sector which we were a little bit underweight over the last 1 year, we are getting incrementally positive. So when we are doing a channel checks, we are meeting a lot of ground level people. We are seeing that the kind of pessimism that has been built in for the IT, probably that is not the case. The numbers will come through. It will be slightly better. So we are getting incrementally positive on the IT sector now.
Large cap, mid cap IT, what would the bias be?
So across our mid cap and small cap funds, we are preferring the mid cap, small cap names. That is a larger bias. But in the meantime, even for the larger names, the kind of pessimism is built in. We believe there is some kind of an opportunity in the large caps as well at this point of time.
Okay, all right, Rahul, I wanted to ask you about the biggest and the hottest theme in the last 45 days, defense. You didn't like that space, right? Did you all manage to finally get in? Or is that the place that, in fact, there is obviously a big runway and there's plenty of hope in terms of penetration, say, in the next 10 years, but valuations are too expensive for your liking?
Absolutely. The valuations are very, very uncomfortable for us to start kind of adding those names. But we have some pseudo defense names that we had in our portfolio that has helped us sail through this kind of an environment.
Okay, all right, Rahul, appreciate you joining in and filling us in with all of those details and all of the themes. But if you want to tell us, leave us with one comment on the headline index. Do you think it will outbeat fixed returns by the end of this year, from here on, post the pullback we have seen?
Yes, I believe we'll have a positive outperformance against the other asset classes.
Okay, all right. So then you're optimistic that the headline, the Nifty, trends even higher from here on. Got that, Rahul. Appreciate you joining in. And thanks a lot for giving us all those themes. Power, real estate, banks, and IT is something that Rahul likes. Well, on the flip side, the theme that he doesn't like too much is the real estate pack as well.